What about the triggers coming in for the market? Let's discuss that with Rohit Srivastava. He's joining us on the show. Rohit, what's your sense? At one point of time, it looked like we are going to race towards that 20,000 mark, but now a bit of a tempered move, a bit of a consolidation.
It's pretty much normal, I think, because we are in the pre-expiry week when a lot of the stock options go into margin. So on Friday onwards, the margins start to apply. So typically, there is a case for some profit booking that comes in, especially related to the option segment. So we remain prepared for that. We just want to look at levels. I think what will end up happening is the last 3 to 4 days gains, we can retrace a little more. Either 38% or 61% retracement of that can actually be seen. So to put out levels, that would mean either a dip to 19,664, which is 38%. And if we do a little more than that, say 19,558 is around 61%. Now, Bank Nifty is already given back, 38 to 50% of the 3-4 day rally intraday up to yesterday's low. But if it does a 61%, it would be at around 45,090. So these would be the lower end support levels from where probably the up move would resume, and you would head again back towards the 19,900 mark on the Nifty and maybe 47,000 on Bank Nifty. So this is the setup in my sense that the overall trend remains up, but you might see some retracement of the last 4-5 days of gains.
Rohit, what's happening in the power sector? We saw NTPC surge 5% in trade, almost 13-year high. But not only that, the power cable companies are buzzing. Earlier, we saw renewables were buzzing, Inox and Suzlon. Turn by turn, generators, transportation companies, cable companies. What are the strongest charts or some of the names for indicative purposes or areas you can specifically highlight?
So I think, power sector's entry to this entire move is probably not new, but today it is getting highlighted because in a weak market, you're seeing almost all segments of power doing well. Otherwise, if you look at the performance over the last month, you actually see something like an REC having done pretty well. The participation is starting from maybe the likes of an NTPC, which had pulled back recently for the last few days, or a power grid. Now, many of these are also PSU stocks. So if I look at my heat map, what I end up seeing is that the biggest gainer is actually the CPSE index. So a lot of the PSU power related names are the ones that are really, moving up, whether it's SJVN, which is in the hydroelectric space, or the others, which are in various parts of power. So I would take a mix of these, as the portfolio, because should we go for, private players in the EV segment? Should we be in the cable space, or should we be simply in, some other part of the power market? Is a slightly tough decision. Also, because some of them are PSUs, they end up being in the value space, whereas there are others which you might sometimes consider in the growth space. So mental breakup of that is somewhere required as to how much you want to allocate where. But I think the whole sector is generally doing well. So, I don't have any specific single stock from a trade perspective. We just keep moving with, which part of the market is really doing well at that point of time.
Sure. Rohit, do you think the auto index is hitting sort of breaks at the moment? And what's your view on Reliance?
So let me speak on Reliance first, and let me highlight we are not investment advisors. So whatever I'm saying is essentially an opinion on what we think is going on. Now, Reliance Industries has broken out of almost a 1-year falling channel trend. Okay, so this was like when it peaked in, say, around 22 April. It was, and then it made another high in November, December of last year. If we draw a trend line of that, it actually broke past that at around 2660 earlier this month. Now, this is a major breakout when you actually see the 1-year chart, which actually indicates that the larger trend is changing from down to up. Now, a lot of focus is right now on the demerger and what will happen after that. Will there be profit booking and so on, which is very, very short term. But like I said, when you get a long-term breakout like this from a major like Reliance, you don't expect it to be the end of that move. You typically would expect it to continue on a 6-month, 12-month basis. So I think Reliance is going to be one of the key ingredients in terms of this rally because it's a major contributor to the index. Your second question was, I'm sorry.
Rohit, the second question was on auto index.
On the autos, yeah, right. So, sorry, I just got caught in the Reliance argument. So, the auto index is doing what banking was doing a while back. If you just look at the sectoral rotation, the beauty of it is the Nifty itself doesn't tend to fall much. The reason is that in between you get the bank Nifty pulling back. And now, as the bank Nifty was trying to break out in the last 2 days, you've actually seen the auto index fall for the last 4 to 5 days. I think this is just rotational corrections. It's not like the auto sector rally is over. You'll probably see it resume when some other sector stops, so that rotation is probably going to continue. I think 4 to 5 days done. I'll give it maybe another day. Even like I said earlier, this is the options expiration week. So whatever selling from the options front is there may be over by tomorrow. After that, I would probably expect the auto sector rally to resume all over again.
And Rohit, before we let you go, how are you approaching IT? There's one round of leg up has already happened. Gartner says H2 may look good. People are betting on second half onward to things to recover. Is it getting all priced in now? Time to get in on the declines?
So we are trying to make this guess between relative performance and absolute performance for the IT sector, because on the one hand, IT did exceedingly well post COVID. But if you look at the last 10 years, large cap IT was an underperformer and mid cap IT was the outperformer. So should we really go back to that regime? That is the easy answer to give, that, okay, that regime will come back, mid cap IT does better than large cap. But there's a lot more happening globally, especially related to AI and so on, which does raise the bar on, whether something has meaningfully changed for the IT sector. I think there is a possibility. I have not fully been able to, investigate it or think about it. But I think you need to be open-minded to the idea that, the sentiment around IT is so negative that in any case, purely on valuations, you'll continue to see buying. After that point of time, you will start questioning to what extent can growth rebound, given that IT is now a favorite around the world. And when that happens, some amount of money does get allocated to that sector. So it is not going to, fall in a big way. It's just a question of, how will it perform relative to some other sector? Should I have more of IT or should I have more of capital goods? I think that is the real question that we are trying to answer.
Relative attractiveness of the sector and the relative outperformance, that's a big thing that you want to answer. Thank you, Rohit, for joining us today and talking to us about a whole host of sectors and what the technical indicators are pointing out too.